episode of the Financial Frontier. I'm your host, Patrick Camuso. I'm very excited today for our guest, Joe Ciccolo, the founder and president of BitAML, which is a compliance advisory firm that's exclusively focused on cryptocurrency, Bitcoin, and Web3. So again, I'm really excited to get into Joe's outlook on the future of AML and Web3 and crypto, as well as his current and past experiences, because as you'll learn during this episode, he has a deep level of experience in this arena that spans over many years, but I'll let him tell you more about that. Joe, thanks for joining us today.
Thanks for having me, Patrick. Pleasure to be on with you. And yeah, appreciate the kind introduction. I'll elaborate maybe a little bit more. So I started a consultancy here in the crypto space back in 2015. So in May, it'll be our 9-year anniversary, May in 2024. So an amazing journey. We've met a lot of friends along the way and grown with the space right alongside it. So I've worked with hundreds of clients, big and small, in the crypto space, anything from a Bitcoin ATM machine to OTC trading desks, crypto exchanges, prepaid, digital wallets, NFT platforms, DeFi platforms, you name it. We've seen it in the crypto space, although every day is a new surprise in the world of crypto. So I'm anxious to see what's next, and that's really what's kept us going 9+ years. And that compliance spans not just AML, as our name would imply, but also cybersecurity, consumer protection, fraud detection, and other aspects of the risk management spectrum. And again, been doing this for 9+ years. And my background, I came in from traditional banking compliance world. So pre-Satoshi, I did AML and fraud prevention assignments within various different larger financial institutions going back to the early 2000s.
Very nice. So yeah, you have a great perspective on sort of the history of AML in this space and are very well positioned to give us a lot of insights on what you see moving towards the future as well. And I want to get into all that. But I guess to get started, what are, some, compared to traditional finance, like you had your background in, what are some of the unique AML threats and considerations for cryptocurrency and Web3?
Sure. I think the bad guys are sort of tech agnostic and sort of platform agnostic. They're going to use any different platform or new technology to move their funds. And anytime you have a new technology, unfortunately, the bad guys are the first to test it, right? They're they deal with the most amount of friction, and so naturally, any new technology, they seem to be in the cutting edge, and industry and government take a little time to catch up. And thankfully, we are catching up. I think the threats that we're looking for are not all that dissimilar to threats that you would see on a traditional platform. Although in the world of crypto, we have some game-changing technology like blockchain analytics, where we can follow the prehistory of crypto and see what other wallets it's touched, time and date stamp, and we have an immutable record. So that's great for those on the AML side, whether you're into the blockchain analytics and forensics, if you dive deep down there, or if you're like me on the policy side. We have an opportunity to identify these particular controls and weave them into the fabric of the AML program for an online exchange or trading platform or NFT marketplace, where you can make that a strong aspect of your overall AML. And I will add one of the different twists that we're seeing and put a lot of emphasis and energy on is consumer protection. So anytime there's a new technology, anytime there's some excitement over things like NFTs and Web3 and crypto, that's great. I love the energy, and that keeps me going. Unfortunately, the bad guys, when they're doing scams, thrive on that energy and take advantage of the situation, in that they put their victims in a position of fear of missing out or some other aspect where they are pushing their victims to get involved in different types of technologies and different types of platforms. And we see a lot more need for consumer protection in this space, really to let consumers know, all consumers know, really, what are the risks of being involved in crypto, what are the risks of holding on, whether that's a potential taxable event, which is, I know, near and dear to your heart, but also other risk factors, in that there's no universal agreed upon price of cryptos, that they can be changed or that they can be sent, anywhere in the world, near instantaneously, and they're unlike a wire where it can be recalled or a check can be canceled. It's a push transaction, and all transactions are final. And so that, I would argue, is a feature, but on the risk side, a consumer may not know that, or they may not know, for example, that an exchange does not have FDIC insurance that their bank does. So if that exchange goes under, unless they have some sort of private insurance or some sort of reserve fund, it's unlikely that the consumer will have their money, as would be the case with an FDIC insured deposit account. So there are different types of risks and different considerations there. But ultimately, at the end of the day, if you're an AML investigator, as I am at heart, you like the fact that we can trace things through blockchain, and that some of the red flags that we are putting out there aren't that dissimilar to those that we would have in traditional banking: volume, velocity, and other transactional abnormalities.
Absolutely. I think one interesting thing you said is the immutable nature of the blockchain. That's something I think that a lot of people are unaware of when they first get into the space. And that's on the AML side and the compliance side, but also on the tax side as well. The blockchain, for many reasons, like you said, attracts criminals as early adopters. But the ultimate problem for them in the long run is that, the ledger is immutable, and most non-custodial wallets, if you can tie an identity to it, are no longer pseudonymous, and, they can be on the hook for those transactions. So what are some of the most common scams or issues that you think are top of mind right now? If you're going to talk to like a base level consumer that's looking to get into crypto, what would be maybe the top 2 or 3 tips or pieces of guidance you would want to give them?
Sure. I think it's withstood the test of time. If it sounds too good to be true, it probably is. So when we see scams, they bear a lot of similar hallmarks to what I would call traditional scams done through traditional methods of moving money, whether that's a deposit account or a prepaid card, or whatever the technology is, or however rudimentary that technology is in traditional banking. The bad guys may be using the same sort of playbook, if you will. It's just a different twist or a different technology. So romance scams are, unfortunately, we're seeing a lot of those in the crypto space, as we still are in traditional banking. And those are complicated because it's matters of the heart as well, right? So there's a financial component, but there's also an emotional component. And quite often the victims don't see themselves as victims. And so that's a lot more difficult to unwind for the good guys that are trying to fight this and convince someone that they're actually a victim. And the bad guys know this. They don't care who they're hurting in the process, of course. But to them, it's one more step before a scheme gets unraveled, right? Because they're appealing to that emotional aspect. And then investor scams. I think, again, we're looking at this both traditional and in crypto. In the case of crypto, it's more of that fear of missing out, or, hey, this is going to be the next big coin. People that have money in Bitcoin, they made their money a long time ago. This is going to be that new coin that replaces it, or this new token, and you ought to get involved in this. Or, hey, let me set you up with some investing advice. Why don't you come on my platform and I'll give you access as a member to this particular fictitious exchange that is only an artifice, and they are really just taking the money and showing you some generic screenshots of what they hope you believe is an online account. And it's unfortunate. I think you can kind of piece together from that there's you could just sort of change the technology in the story here in my hypotheticals, and it would be something that would be not too unfamiliar to those listening in the world of traditional finance.
Yeah, like you said, blockchain is a new technology, and some of the early adopters, unfortunately, are going to have nefarious purposes because they're willing to deal with more friction in the early days. And that also, I think, speaks to its usefulness as well. And as the industry starts to mature, we'll weed out a lot of these bad actors to a much larger degree, and we'll have a much more mature industry with a lot more guardrails for people to even protect them. And I believe that's a lot of what you're looking to do, both through your company and just through doing videos and podcasts like these, because the education in this space is such an important part of it because it is so new. So outside of the consumer side, is there any consideration specifically for CPAs, CFOs, Web3 CEOs that are going to be potentially transacting with cryptocurrency business to business that are maybe unique from that perspective?
Yeah, sure. If we're talking about CPAs and accountants, I mean, I think that this is probably not a surprise to you, but the stronger the record keeping, the better, and not just pointing to the blockchain and saying, well, it's all there, right? What records do you have to support that in terms of your transactional activities? And if you are concerned as a CPA or as an accountant getting involved with someone in the crypto space, that's understandable. It's a new industry. You want to know who you're working with. You want to make sure they're keeping good records, and to the degree possible, make sure that if you are working with a company, that they are properly licensed and registered. Should they be considered a money transmitter or whatever designation they have? Simply someone coming to you saying, "Hey, I have a bunch of crypto transactions." Well, if it's a high volume and a high velocity, is that person a day trader, or is that person engaged in some sort of money transmission activities? And if they are, well, that's fine, provided that they're properly licensed and registered. So I think that having, in a sense, a sort of know your customer approach as an accountant, as a CPA, in getting to know that customer. And I think one, it's just great customer service, right? Getting to know your customer is what business is all about, and being able to dazzle them and delight them with your products and services, and educate and work with them. But that process needs to start off with making sure that they are properly, they're properly registered and regulated, as I mentioned. And then looking for transactional anomalies. Now, I understand as a CPA, and unless we're going down the forensics path, if you're working on tax preparation, you're working with what you're handed. If you're starting to see some abnormalities in terms of movement of funds, or things just don't seem right, there's a high volume, there's a high velocity, maybe take a step back and reach out to someone on the compliance side and say, hey, I have this potential party that I'm working with, and something doesn't seem right. I'm not able to find the information online. Can you help me research if they are properly licensed? These transactions, and maybe show a little bit of a sampling of different activity with proper redaction of certain characteristics, and say, hey, what do you think about this? Because the last thing you want to do as an accountant or CPA is work with a company that is not properly licensed, not authorized, or is engaging in some dodgy activity. And sometimes some simple research and some Google searches, that might do the trick, but sometimes you need to go a step further and bring in some of the risk management folks that can kind of take a look at it from an objective bird's eye view and say, hey, I really don't think you should be working with a particular party, or perhaps an explanation for what is there, and put them in a position to have some questions to be able to ask that particular party, so that you can sort of fully flesh out their fact pattern and really get to know them.
Absolutely. And I believe this is a value add for CPA firms and CFOs when they're, talking to prospective clients or during their initial onboarding with clients, to have this on your checklist of items to review. Are they compliant from an AML and licensing perspective? And if not, then that's when you should get them connected with BitAML and Joe or someone like them, in order to get them up to speed and get them into compliance as soon as possible. Because half the key, a lot of times, maybe a company comes to a CPA or comes to a CFO, and they're not even aware that these regulations apply to them. And you can really help to protect their bottom line in ways that are outside of just tax and accounting, just by giving them this advice, by being knowledgeable in the space and connecting them with the right people.
Absolutely.
So Joe, another interesting point that I wanted to sort of get your insights on is, how are the current AML regulations, when they're applied to crypto and blockchain and to some of these new on-chain assets and just ways of transacting, like you said, are the current regulations sufficient for crypto? Does there have to be any sort of regulatory changes, or do you believe that it's just more about just educating this industry on the current regulations, or do you foresee any changes in the future, or are there any current issues or regulatory gray areas or holes right now that need to get filled up?
Yeah, I think for the most part, we are in a good position, despite what maybe some members of Congress and others have said, oh, this is the Wild West. No, it's far from it. It's actually very strongly regulated. There are a number of different agencies at the federal level. I'll focus more in on FinCEN, which is a bureau of the U.S. Treasury that regulates money transmitters at the federal level. And they came out really early on with their guidance, at least early on in the lineage of Bitcoin and cryptocurrency, and said, if you're providing some sort of exchange or exchanging service, crypto to fiat, fiat to crypto, or crypto to crypto, we consider that money transmission. And we at FinCEN have regulated money transmitters for years. And here's a registration process. This is how we conduct examinations. And they're using their traditional framework. Now, of course, over time, they've supplemented that with their own education, their own internal coaching and learning, or junior analysts, or those that maybe don't know too much about crypto at the outset, and bringing them on with more senior folks to conduct these examinations. And so I think FinCEN is doing a great job, and they've done their part in closing that knowledge gap. So to say that it's not regulated, far from it. I think on the state side is where we're going to see a lot more action, and have seen a lot of action in 2023 and moving into 2024, where some of the states are updating, believe it or not, their legislation didn't contemplate a type of currency outside of that which is issued by the government. And so they've had to update and change some of their laws and make some adjustments and make some accommodations for this new technology. That happened here in California, where the law was not properly equipped to regulate crypto-related activities, and that resulted in the passage of Assembly Bill 39 that was signed into law by Governor Newsom this past October 2023. So states are having to make those adjustments, and then in so doing, working with the regulatory agencies that carry that out to effectively license, onboard, and then get into the examination cycle with crypto companies. And some states have had the ability to do that already, or they've had regulatory agencies that didn't necessarily need to pass new laws, but rather could use what effectively was already in the books to regulate money transmitters in their state, and have done so for quite so many years. So I think the tools are there. Sometimes we just need to supplement them with some additional tools, or maybe just sharpen them a little bit, if I can continue with that analogy. But to suggest that it's not regulated or that we need new laws, I think at the state level, again, I think in so much as we need to tweak the laws to reflect things like technical definitions of money and make sure that it applies. Yeah, I think it makes sense to do that, but I don't know that we need to create a new regulatory agency or a new super regulator in Washington or anything like that. I think that the pieces are there, and there's going to be some tweaking along the way, as there ought to be, right? We all need to keep sharp. No, not just industry, but law enforcement and government as well.
Absolutely, absolutely. Now, when you're seeing the current legislation and some of this new legislation, like you mentioned, just in your overall considerations, is there any distinction between the type of asset that we're talking about when we're talking about just a general cryptocurrency versus an NFT, for example, or are they all sort of batched into the same considerations?
It depends on the jurisdictions. I think if we're talking about NFTs, for the most part, the states have kind of moved that aside, at least for the moment. Not to say it's not important, but they want to concentrate more so on crypto exchangers, those engaging in some sort of offering of supporting token exchanges, whether that's a Bitcoin ATM or an OTC desk or an exchange. They've kind of put NFTs off to the side. I think they'll come back to them, and probably will in 2024, especially from a tax perspective. And I think that's, again, something that's probably ringing true to you. I see you nodding, Patrick. But yeah, I think where we're seeing the states focus much more on wanting to go dive a little bit deeper into different types of business models within the crypto space. So now that they're comfortable with crypto, and again, maybe have put NFTs and some of the other ancillary ideas that are on the periphery of crypto to the outside, and are focusing again on strictly on exchangers, now they're diving deeper into different business models. And that's why we saw several states pass laws specific to Bitcoin ATMs. Connecticut, for example, and then my state, California, with Senate Bill 401. And now we're seeing Florida and a few other states pick up the baton and say, okay, I think we can pass something that addresses this particular business model. And generally that comes from a consumer protection standpoint when we're talking about Bitcoin ATMs. There's less is known about them, and it's smaller, more retail walk-up transaction type environment, and there are different risk considerations. And I think that's why we're seeing more states weigh in on that specific business model. But it's not just that business model. We're seeing that with digital wallets and other service providers out there, where now the space is kind of segmenting and dividing different business models.
Yeah, I agree. I even see that somewhat on the tax side. It's been much more federally focused and cryptocurrency focused, but it's starting to get to a state level slowly but surely. And I think NFTs, like you said, are somewhat pushed to the side, but eventually will take the center stage again, likely during, the next time they start to really see a lot of NFT transactions and we start to see that start of the market pick up again. Maybe we'll see some renewed focus there. I think we'll start to see some new business models, like you said, just using NFTs on chain that will also, catch regulators' attention and just require them from, many different perspectives to look at it closer. So, Joe, another item I really wanted to get your opinion on, because I think this is just a hot topic industry wide, is sort of privacy versus transparency. As we move into this new stage of our industry maturing, from the 2015, 2016 days. There's a lot of talk right now around, KYC in a lot of different forms. We're likely going to see that increase to a large degree for many purposes, including tax purposes and other compliance purposes. So what's your overall perspective on
that? Sure. Yeah. We're seeing a lot more attention being placed on alternative types of platforms like NFT marketplaces, even Bitcoin miners, and others that have not historically had KYC or AML, as would be the case for like an online exchange, for example, or a Bitcoin ATM that we talked about earlier. So we're finding that our firm is doing a lot more what I would, at least at the moment, classify as a voluntary AML program, in that there's maybe not necessarily a mandate under the Bank Secrecy Act or other regulation to have an AML program, but pressure from the marketplace because of the nascency and the risk factors involved with crypto, and pressure from the banks and other investors that are involved in working with these crypto companies that want to see some level of compliance or some level of regulatory oversight that maybe isn't there formally from the government, but is there sort of in spirit in terms of carrying out some sort of compliance. And if we're talking about a Bitcoin mining operation, that's looking at what wallets are associated with their activity, looking into the backgrounds and doing some due diligence on the different mining companies. If you're doing some sort of co-location service, who are the beneficial owners, and then on the digital wallet side, what are we dealing with in terms of IP address? Are there any pieces of information we can utilize and utilize to do some sanction screening, at least at a rudimentary level? If they're classified as a function of the Bank Secrecy Act, there is an obligation to have a written AML program. But for those that don't, whether that's through some sort of legal determination or other means they've come to that conclusion, and don't have to have one in the eyes of government, they're voluntarily doing so. And I think we're getting to a point where it's just about every crypto company, unless you're a tertiary services provider like a consulting firm or software development for reg tech or something like that. There's an expectation that there's going to be some level of formal written commitment, i.e. an AML program, that demonstrates what your controls are, and how you are effectively helping out the government in fighting potential money laundering or other illicit activity.
Absolutely. There's really going to be, no option if you want to operate a compliant marketplace. You're basically going to have to KYC, and you should start to be moving towards doing that sooner than later. And that's what you're getting at, is that you're working with people to be proactive on these types of considerations and setting up plans now in advance.
Yeah, absolutely. It's very difficult to bolt on compliance later on. If you weave it into the fabric of your company when you start off, and it should grow and it should iterate, right? Good compliance programs do grow and do get stronger and do add personnel. And it shouldn't be a desk policy, meaning that somebody wrote a nice policy and then they put it away in a desk. It should be something you act upon and then iterate on and grow with. And it's going to save costs long term. So if you're a long-term planner like I am, and you feel your company is going to be around and in it for the long haul, and you really want to pour yourself a very strong foundation, that includes starting off the right way with compliance and putting some things into place that maybe seem optional. Folks ask me all the time, well, why would I do something if it's optional? It's just a cost center. Well, that's not the right way of looking at it. earlier I'd mentioned know your customer is just good business, right? Knowing one's customer, their financial dealings. There's no rules against leveraging certain pieces of information on the business development side, right? You're collecting KYC information, you're knowing about the customers, what types of products and services they like to use, what time of the day are they most likely to call you. You're really getting to know these different factors that can help out on the business side. And so, it is possible to have a second bite of the apple when it comes to some of that KYC data or some of the other ways in which you're observing the activities of your customers on your platform.
Absolutely. And I know your company is multifaceted in the sense that you can assist a lot of different sub niches within the Web3 space and help them in a lot of different ways. So, what are some of the common trends that you're seeing right now within your company in terms of, new potential clients? What is sort of the most common theme in terms of their needs, type of client, and those types of details?
Sure. Yeah, it's a little bit of a mix. I think, setting aside our existing clients and those that come back to us year over year, which we certainly appreciate and enjoy those opportunities to grow with our clients. So the newer entrants into the space seem to be a little bit more niche than maybe in the past. They're whether that's a geographical niche like a regional company or a specific type of need they're fulfilling, whether that's invoicing for companies that are doing international trade. Right, that's a very, very narrow niche, or a marketplace for digital artists to buy and sell their works of art, their digital works of art. Co-location mining services, having written compliance programs for those types of businesses. Yeah, so it's really a diverse group of I don't even know if I want to say group. It's just a diverse collection of all different types of business models and ideas. And I think some of the more tried and true business models like online exchanges and Bitcoin ATM operators and OTC desks, those will continue to be here and they'll continue to see competition. But it is very exciting to see, sort of these companies on the periphery of the crypto space and in what we have sort of since reclassified as Web3, doing all these different types of ideas and iterations and really getting to see what they're working on.
Yes, it's very interesting to see how the terminology evolves over time. I'm interested to see what the next iteration of that's going to be. So when you're speaking with these clients, is there any common misconception that they have just about their needs? Is there anything they're surprised by in terms of what they have to implement with you, or is it that they're coming with a good foundation and understanding of what's required of them from a compliance perspective?
I'd say much more the latter. I think certainly in our early days back in 2015 when we launched, we were having to convince some of our clients that structuring was a crime, right? So we really had an uphill battle in terms of education. I think fast forward to today, the clientele and the folks who are meeting in the marketplace, and there's exceptions to everything, but has really matured to the degree when we get an inbound inquiry and we sit down with a prospective client, they're generally much more buttoned up from a business sense, and they're asking good questions, but it's evident they've done at least some foundational research into AML, KYC, OFAC, and other areas, and can actually hold a good conversation with someone like myself, who's sort of over the hill and been here 2 decades doing compliance, and they're able to keep up in the conversation. They're asking good probative questions, not from a sense of I don't want to do this, how do I get around this, but in the sense of I want to know more, tell me more, what's this, and being very open-minded for the controls and the procedures and policies that we write. And then on the audit side, really listening and saying, hey, I want to get better. This is an opportunity. This isn't, me standing here getting lectured about what I didn't do right. But for them, it's almost like they want to be a sponge and soak it up. And so the space has matured immensely over the past, 2 or 3 years. And I think some ups and down cycles will do that to you. I also think the companies that sort of have been here and withstood the test of time kind of look around and say, well, what do we all have in common? Well, we're doing the right thing with compliance. We're doing the right things by our customers. We're keeping good records. We're cooperating with government investigations, whether that's law enforcement or tax inquiries or what have you. And that's how we're going to be here. There are going to be companies, unfortunately, that are going to be flash in the pan. They're just going to try to undercut everybody and do things on the cheap and cut corners. And their time will come and go. They'll be out of business fast, whether that's as a result of their customers turning on them or perhaps more likely the government coming down on them and saying, hey, this is not how we play ball. and they'll either way they'll find their way out of business in short order, and it's tough. We've had clients of ours say, hey, look, the company down the street's not doing this, or the company down the street is able to do this. Why? And our answer is circumstances. But I will tell you, if they're doing something wrong, it's only going to be a matter of time. It's a matter of when, not if. And so don't worry about who's in the swim lane next to you. Focus on yourself, long strides, and continue to do what you're doing on compliance. And that's how you get to the top, right? It's a marathon, not a sprint. Don't be distracted by those that are cutting corners. It seems tempting, and there's temptation all around us, but don't fall for that.
Absolutely. You want to play the long game in this space. That's what's going to help you win over time. And I'm sort of seeing a similar thing at Camuso CPA, where new clients or new prospective clients, like you said, are much more aware of the tax landscape. Back in the day, similarly to you, I would have to basically convince people sometimes that they even had to pay taxes on crypto in the early 2017, or that crypto to crypto trades were taxable. Those were the types of initial calls I would get back then. But now, obviously, people are much more aware of the tax landscape. And on the Web3 side, especially wanting to get sophisticated accounting and tax systems in place up front. So I think that's a good thing that we see on both sides, is that there is more of a maturity to the space. But also, unfortunately, another thing that I see lately is a big increase from people who were in the last wave, who weren't compliant and are now getting a lot of tax notices and audits and inquiries from the IRS, and having to go back years and years in their accounting and years in their taxes to sort of fix these issues and address them appropriately. So are you seeing any of that in terms of enforcement or investigations for people that are non-compliant at all on your side of things, or has that not come to fruition yet? Because regulators are slower to catch up to these things, but like you said, it's an immutable ledger that that basically these transactions and this information is not going anywhere. It's going to be there in perpetuity. So what's your perspective on that?
Sure. It's maybe a little bit different on the money transmitter side. So again, vast majority of our clients are regulated as money transmitters, setting aside the securities and commodities CFTC side of things. So those exams are done on a random-ish basis. I'm told it's random, and that they're pulled for selection, and the examinations are conducted. So in the world of traditional banking that some folks may be used to, the AML examinations are conducted annually like clockwork. This is at deposit banks, right? So pretty straightforward. It's a little bit different with FinCEN because they have so many different types of what we call NBFIs, or non-bank financial institutions, they have to look over, anything from insurance companies to casinos to money transmitters, both traditional and crypto. So you can see there's a big kaleidoscope, and they can't be everywhere all at once with their examiners. And so it's done on a random or rotating basis. And then generally speaking, depending upon how you do on your examination, usually dictates how often the examination comes around, and eventually, officially, unofficially, there's some sort of cycle associated with that. Similarly, at the state level with money transmitters, they generally put you on an exam cycle depending upon how successful you are. And we try to get that message across to our clients, like, hey, if you knock it out of the park, you realize they're not going to come back for as long a period of time. That doesn't mean we rest on our laurels, but it does mean that we have less of a business interruption when the examiners are come in and are actively engaged with us. So there's a little bit of a carrot and stick there.
Exactly.
So we try to use that to our advantage and play that up with our clients. You don't want to you want to have the best opportunity, of course, to engage the examiners. But we also understand that as they do, hey, the reward should be that we don't necessarily have to watch you as closely as maybe we have to watch some of the other children, if you will, in the space. It doesn't require as much oversight, or the oversight can be done from a remote, digital capacity, as opposed to doing these examinations, on a annual basis, or even a shorter cycle than that. As far as enforcement actions, FinCEN in the States, what they put out there is a small minority of the enforcement actions they have. Generally, they're sort of a smaller nature, not necessarily monetarily smaller, but smaller in the sense that maybe you got dinged for one or two things, and it doesn't make the print. And I suspect the same is true in the tax world. Maybe we'll see a celebrity that doesn't pay their taxes, and there's a big press conference, but less is said about the guy or gal that got a letter in the mail saying, hey, fix this and you owe us, $300 or something, and they write a check and send it in, and there's really no fanfare or press around that. So it's somewhat analogous on our side in terms of the money transmitters. It's a direct engagement, and there's usually a back and forth. And what the regulators do take into consideration, and I think the same is true in taxes, I would have to guess, is how cooperative you are. If there's some self-disclosure, if there's some positive rapport built up, maybe you've done some great things in the past and you had some good compliance, and there was a little bit of a slip up, and hey, that's not really the company that we know of you guys to be, and there's some facts and circumstances weighed in, and perhaps if you are in a stronger position or have done things fairly well in other areas, what may have started off as a $10,000 fine may have found its way down to a $5,000 fine. There's no sort of scientific formula that I know of that calculates this, but you can kind of look at qualitatively how this quantitative equation is calculated, in that, again, self-disclosures, cooperation, engagement, and past patterns tend to dictate or have at least an influence on the level and magnitude of any sort of civil and potentially criminal charges one might face.
Absolutely. Like you said, proactive compliance is key, because that can help when you do get scrutinized. They're going to see that you are proactive and that you're playing by the rules, and then that can reduce your overall frequency of your audits, which can help with business continuity, administrative burden, even fine penalties. So it's always key to get out ahead. It's not going to pay off day one, but eventually over time, as your company is operating, it's going to pay dividends, and it's going to ensure you protect your bottom line over time. So Joe, I really appreciate this conversation today. It's been such great information, and I'm looking forward to having you back in the future. Can you briefly tell listeners if they want to get in touch with you or with your team, whether they want to just speak directly with you or maybe get a consultation at BitAML, where can they contact you?
Yeah, sure. Email is probably the best way. You can email me directly. No gatekeepers here. It's joe@bitaml.com. So Joe, Joe, at bitaml.com. And check out our website, bitaml.com. We have a lot of great information up there, not just about our team and our services, but we have a blog page, and we're pretty prolific in our blog and our content. Anything from some 101 content for those just trying to learn some basic ropes of AML and where we can help out, to things that are very timely of what's going on in the space, and whether that's here in California at the state level or some of the goings on federally with FinCEN and OFAC, and we really try to cover as much as we can. Obviously, we can't be everywhere and all at the same time, but we do our best to relay some of the more important pieces of information out there, start the conversation, and really help our existing clients and prospective future clients know and understand as much as they can about compliance, and really get that compliance gear moving. And we continue to encourage that among our clients and the industry as a whole, whether you work with us or not. We want to provide as much information as possible and really help out folks with compliance information, because I think that's going to lift us up as an entire industry.
Absolutely. And there's a ton of great information there. And I know you guys have been putting out that information for years. So I encourage everyone to go to your website and check that out. And also reach out to Joe directly. He's more than willing to sit down and have a conversation with you, learn about your company, and see how he can help you. I know that firsthand. So definitely reach out to him, reach out to his company to learn more. Joe, thanks again for joining us on the Financial Frontier. And to everyone that's joined today, I hope you gained some value from this, and I appreciate you listening in today. Until next time, I'm Patrick Camuso, signing off.